So thank you so much. Welcome to our AskWEP series. To everyone who's joined us, welcome to the AskWEP series on unlocking the financial potential for your businesses. We are very fortunate today to have Ms. Anubha Prasad join us today as an expert to answer your question and address all the barriers that you face in accessing finance for your businesses. So I will start by very briefly introducing Ms. Prasad. Ms. Anubha Prasad is a general manager with the Small Industries Development Bank of India. She presently is heading its Patna region, which comprises the twin states of both Bihar and Jharkhand. Anubha ji is a technocrat, a career banker, and a sustainable finance practitioner, leading SIDBI's credit and credit plus operations and steering all of its development work in the region as well. A veteran banker with more than 20 years of experience, she's represented SIDBI on the G20 working group on women's financial inclusion and business acceleration during India's presidency of G20. She is also a co-founder of an angel venture fund of for Bihar-based startups. This venture has closed more than 14 deals so far and has a huge network of more than 350 angel investors. So she is exactly the right person to answer all your funding related questions. She is also on boards on several organizations, and under her leadership, SIDBI Patna is currently the fastest growing region of SIDBI in terms of credit portfolio. Very welcome to the Ask Web series, Anubhaji. And also, thank you for taking out time to speak with WEP users and all women entrepreneurs who are waiting to pose questions to you. For those who've joined us for the first time in the Ask Web series, I will quickly introduce the Women Entrepreneurship Platform to you. The Women Entrepreneurship Platform is a public-private partnership platform, which is an aggregator that focuses on building a robust entrepreneurial ecosystem for women in India. Today's session, we will actually focus on unlocking financial potential as a part of this regular Ask Web series that we do. In the Ask Web series, we usually bring very eminent experts to directly talk to women entrepreneurs on subjects of their interest. Not wasting more time and directly posing questions to you, Anubaji, is we'll start with the most crucial area of business financing. I will ask you a first set of questions that will actually that have actually come from more than 100 WEP users who've sent their questions to us in advance for you to answer. And if I go to the first question that we have for you, is we know that every entrepreneur needs finance. Many of them are self funded. However, not all can afford to be self funded. So they definitely need access to formal financing avenues for their businesses. And a precursor, we all know that a precursor to accessing any kind of finance is actually having financial literacy and financial awareness. So, in your opinion, what are the key aspects that all entrepreneurs should consider when they are on a journey to make themselves more financially educated, financially aware? What are the aspects that they should be focusing on? Over to you, Anubhaji.
Thanks, Sonal. Thanks first for the glowing introduction, and then of course putting this together and having me over as a guest speaker. And thanks so much, Web as well as Microsave for giving me this opportunity. Coming back to your question, that what are the things women entrepreneurs should keep in mind, which can make them more financially included as well as bankable, credit worthy and bankable.
Yeah.
So we all know that there's huge credit gap. I mean, I think about 2 trillion rupees kind of credit gap we have so far as women entrepreneurs are concerned in India and globally also. Since I was part of G20, wherein 18 countries were represented, and 20 guest members were there, 20 countries, 38 countries network. We saw that globally also this gap, in terms of financing that women get from the formal channels or the formal network is humongous. It's not that it's an India specific phenomena. Uh, Now the question is that what are the factors women should keep in mind on their entrepreneurial journey? Because we rightly put out that it's not possible to attain a scale, a larger scale, without finance from the formal financial channels, because particularly women do not have that kind of wherewithal to self finance their units so that they can achieve a scale and also run in terms of scalable operations, pan India operations kinds. So first of all, as you pointed out, financial literacy, of course, it's very important. So when you approach a bank for a financial service or a financial product, and particularly a loan product for your enterprise, so there are certain things you must keep in mind. One is that it is always good to approach a bank which has your credit history, or if not credit history, then your transaction history at least. So if you have an account with a bank, then your transaction history of your unit will be kind of apparent to the banker, that it is, if there are sizable transactions, numbers and credits, debits, you've been paying your suppliers, you are getting from your customers, you are getting payments from your customers, then it kind of makes a credit history or a track record for you. Now, just imagine that with so many women entrepreneurs across India, there is a humongous data which banks are sitting on. Like if we talk only about the credit history. So, one is that it's always good to build a transaction history with a bank. Now, the second thing is that when you are approaching a bank, so you should have your papers in order. And I'm talking particularly in context of banks, not in context of microfinance institutions or the partner lending institutions that SIDBI also has. So you must have certain documents in place, and you must be very mindful that you are kind of regular with all your documents. For example, I've seen very good units who are not very regular with their GST returns. So if you fall within the definition of GST, which is 40 lakhs turnover for a manufacturing unit, or if you are an e-commerce player, then you also liable to kind of register yourself under GST. So file your GST returns regularly, without delay fine. That's one thing, because it's not only your duty as a business to do this, but also it builds a track record for you. And GST, so we kind of, whenever we are assisting a unit, we look at their GST return history. And if there's delayed return filing or delayed payments of GST, these are two different things. One is return filing and one is payment of GST. Then there's a score, we call it JOCATA, JOCATA, which is generally who are irregular with this, that score comes very low, and which is a red flag for a bank. Thirdly, so generally banks will look at your 6 months GST and 6 months transaction history of the bank account statement, right? Then, of course, your know your customer, as we call it, KYC. So the KYC documents should be in order, and with the KYC, your income tax returns also. So even if you are a non-taxable entity, then also if you file your ITR, an income tax return, that will also going to be that will always help you in building a track record, income tax track record with the government, which will give the banker a lot of confidence. Now, coming to financial literacy part, there are certain things that you must understand. One is that when a bank assesses any project, there are certain ratios that bank looks into. I'm not getting into a lot of technicalities. However,
Yeah.
banks will generally look at any project that you are working on, how much you are contributing from your own side. It could be 10%, it could be 20%. If it is a 100% financing scheme like SIDBI has, then it could be even 0%. But then, of course, there is how much debt the company or the entity has overall, because there's a ratio which we call debt equity ratio, which we look into, that the company or the entity should not be borrowing beyond its means. Like you should borrow only that much that your operations can support. Then there are other statutory requirements, like you must have a power sanction, you must have environmental clearances if it is applicable. Then of course you should have the marketing tie-ups. Then ownership document is also very important, because if you are running a proprietorship or a partnership firm, then your stake, how much stake. So generally a unit or an entity which has 51% stakes, 50 plus stakes of a woman promoter, is considered a unit run by a woman entrepreneur, right? So if it is a proprietorship, of course, it's 100% ownership. And very importantly, it's udyog Aadhaar number, UAN, or that is also very important. That's also important to get you the benefits of the government subsidies and government schemes, right? And then there is MSME formalization project which is going on, SIDBI and MSME ministry. So under that also you can register yourself without much hassles. There are people who are there to help you with this. So other than this, financial literacy, you should know your project, you should understand your project, what are the marketing tie-ups that you have, what kind of projections you have for your unit. So you should have a, I would say that a bird's eye view and a vision about, how you're going to perform, how your operations will go, and how you'll be able to repay the financial services or the loan or the working capital that you are taking from the bank. So basically the bank should get the confidence that, okay, the person I'm funding. So I've come across units wherein, the operations are very good, but the papers are completely in dire straits, haywire. So the banker cannot make sense of these papers. So formally having correct documents is the first step towards, becoming more bankable and becoming more credit worthy. So I think that answers the question broadly. I'm not getting into nitty gritties, but then it's basically the concept of being bankable should be grasped by the women.
Sure, thank you so much. This is so useful, Anubhaji. So, what we understand is that you should have all your documents in order. You should give the banker a visibility on through your documents and through your transaction and credit history with the bank, on how bankable you are in terms of your regular banking with that bank, all documents in order, and of course the list of documents that you mentioned, and also the important details about GST. We'll definitely keep that in mind. Second important question that we have is, funding is available from a lot of entities. So funding is available from public sector banks, from private sector banks, from NBFCs, from venture capital, and many other public and private sources. So as an entrepreneur, how do I decide that in this marketplace of lenders, which is the right funding avenue for me, and which is the right funding instrument in accordance with the stage and size of my business? So how do I assess that as a business?
So Sonal, you answered my question, this question partially yourself, that the stage of business is very important, and in a particular stage, a particular kind of financing options open actually. So we know that at the bottom of the pyramid, or at a level of say below, 5 lakhs kind of a requirement, there are microfinance institutions. The average size is of course 40,000 rupees of a particular microfinance woman borrower. Uh, Apart from microfinance, there are, if you graduate a bit, then there are NBFCs and lending institutions, like you have NBFC MFIs and NBFCs who give small check sizes, right? Now selecting a particular lending institution in that segment actually, the accessibility becomes very important rather than the cost of the fund.
Hmm.
So, if you get access to finance in an expeditious manner at your doorstep, that becomes very important rather than, 1 or 2% rate of interest, which comes into play at a later stage. So that's the stage wherein NBFC and lending institutions come in. At a slightly bigger scale, I wouldn't say bankers don't come in this segment number two. However, banking is something wherein there are different schemes for the women borrowers, like you have Stand Up India, and every bank has its own scheme. And of course, we all know that up to 2 lakhs of loan, there is a credit guarantee scheme which is a trust founded by SIDBI, and there you can get the credit guarantee if your proposal is otherwise bankable, otherwise support worthy, but you lack in collateral. Then of course you can take the benefit of CGTMSE scheme for getting access to credit. So maybe slightly bigger. Coming to venture finance, so venture finance is a very different area, very different ball game, since I've been there, and I've also done some venture funding. So venture finance is for very high growth, innovative companies, because venture finance does not work on the principle of a rate of interest. It works on the rate of interest. It works on the principle of giving an exit to its investors, because venture capital generally comes in as an investment or as an equity in the company. And equity is a very high risk money, very high risk finance, because in case of equity, it is the investor who becomes a part owner of that company. So if there's a downside, if the company doesn't do well, then the investor's money is totally gone. And if the company does quite well, then the investor's money grows with it. So everybody who's coming to invest in a company with a high risk kind of perception that they are taking a high risk, so there's a downside and there's upside. So they will believe that the company should have a growth story which can fetch that investor a very high return. So maybe the exit can happen at a 2x or 5x kind of multiple. So venture capital you should go for, and in fact you will get also only when there is a very high growth potential, innovative kind of business, and also the market size is very important. It's very important, because if you have a local market, you will not get funding from a venture capital. But if you have market which is pan India or very big market, then of course venture capital can have a look at your business. For example, I'm just giving you one example, and Nika is a woman founded business,
Yeah.
a stock exchange listed entity. So look at Nika's market, the entire Indian middle class, upper middle class, its market. So the tech play is very important when you are going for a venture
Mm.
capital kind of finance, because without a tech play, you cannot scale your business to the levels of Zomato or Swiggy or Nika or maybe Flipkart. So that's the different scale. Now coming to this, to the size wherein our most women entrepreneurs will fall in, it's like I would say that maybe 10 lakhs kind of, or 20, 25, 50 lakhs of kind of loans. Then in this size, the factors that I listed out, transaction history, good rating in terms of GST, in terms of CIBIL, what we call it, the credit history or the credit rating, what we call CIBIL, CIBIL score, TransUnion score, which is a personal score, as well as your enterprise's CIBIL score. So all these factors become important. So SIDBI has schemes like Arjana. We have a scheme wherein we do almost 100% finance. So if we talk about bank schemes for MSME customers who are women, so generally the schemes talk about some kind of concessions in their general schemes, right? So there could be a concession regarding your contribution. So if there is a contribution requirement of 25% for general customers, maybe for women it will be 15% or 20%. If there's a collateral requirement of 1.2 times, then for women it should be less, or it should be not, it is not there. The collateral requirement is not there. Similarly, the rates benefit could be there, maybe a percent less than the general rate, or maybe the processing fee, if it is 1% for general customers, then for a women entrepreneur, it could be 0.5%. So generally, these schemes are rejigged out of the same generic schemes that we have. However, there could be some concessions for women entrepreneurs. Now, coming to a very important aspect of collateral security. So,
Mm.
in India, and not only in India, but worldwide, women lack access to property rights. So that's a very, very rampant situation across the globe, that women are generally not given property rights, and because of that, the ability to offer collateral security for a woman entrepreneurs is much more than it is for a male entrepreneur, right? So for that we have credit guarantee scheme, which is your requirements for collateral can be substituted by a guarantee in lieu of a guarantee fee, an annual guarantee fee. So it's there. And of course, the banks have come up with schemes wherein no collaterals can be insisted upon from a woman customer, and we also have. And thirdly, there could be that out of your promoter's contribution only, there could be a small fixed deposit carved out, and which can be used as a collateral security. However, if it is, a term loan, like you are taking plant and machinery, land, building, etc., the requirement for collateral is less, for the natural reason that the, security, some fixed assets are being built out of that same loan amount. However, for working capital, this requirement is of collateral is more pronounced. So we'll come to it later when we are talking about the working capital finance. So depending on the stages of your unit, which stage you are in, of growth you are in, and depending on the nature of your unit, it is the kind of, financial avenue that you are there to tap. So the information is access to information is very important. So any asymmetry there will take you to a wrong place. So get your information correct, that who could be my best, banking partner or my best lending partner. So that is very important understanding of that.
Great. Thanks so much, Anubhaji. This was very useful, and also the kind of provisions that many government schemes have, including the credit guarantee scheme, which is a very important scheme by SIDBI, which enables collateral-free lending up to a certain limit, is also very important to explore. Coming to my next question on diving a little bit deeper, because this remains another very big bottleneck for many women entrepreneurs, is they have individual credit histories. They also have household credit histories, because there are you need your household members as guarantors for your loan many a times. So how important, and then how their business has transacted in the past with the bank, or if they are a first generation entrepreneur just starting out, they might not have robust credit histories to show. So how important is the role of credit histories and demonstrating the credit worthiness of your business to a banker, especially when you're starting out as a first generation entrepreneur? You do not have a very robust credit profile already, a digital trail which you can make visible to your banker, to give them more visibility into what kind of a credit worthy customer you are. So how do we deal, with loan applications or access to finance and
Right.
credit in those scenarios?
So, Sonal, actually, if a unit is being run by a set of promoters, a woman, maybe family members, generally it is in India, MSMEs are family owned units.
Yeah,
Then,
yeah.
of course, the credit history of all the owners or all the
Mhm.
stakeholders matter. However, on paper, of course.
Yeah.
However, even if it's a single woman entrepreneurs unit, a proprietorship or a partnership with two women, the credit
Mhm.
history of their family members will not matter to a bank. However,
Okay.
it gives them a kind of mental comfort, an additional comfort, that okay, the family is into business, they have been in this business or a different business, so they have a history, they have a track record, so this the chances of default are less. So that is something we generally build in the appraisal memorandums, that the family has been in the business. However, when you do the scoring and all, then credit scoring, which is done on a very objective basis, then of course those who are not part of the unit, their credit history is not factored there.
Okay.
having
Okay.
said that having said that, how, when you are starting up, how to build that kind of credit history which gives the banks a comfort. So we know that we should be aware that there is a score called CIBIL TransUnion score, which rates you on a 900 scale, and we
Yeah.
generally consider that a score above 700 is good. If you don't have any credit history, then then CIBIL will fetch you a score of -1 if you don't have any credit history. However, even if you have a credit card, or if you have played a guarantor to a loan to one of your friends or colleagues or family members, then those aspects will be captured even if you haven't taken loan. For example, I have seen many cases wherein for a minor credit card default, maybe 100 200 rupees, kind of even that size
Hmm.
of default, or maybe something which missed a person's attention, something, some
Hmm.
bill came in, some credit card bill came
Yeah.
in, and you didn't bother to pay it off, so maybe 200
Hmm.
rupees, some penal interest or something, that also spoils your credit history or your civil credit worthiness score, right? So it is very important to be mindful of what kind of financial arrangements you are having with people. Suppose you gave a guarantee, a personal guarantee for somebody who did not repay the loan and you don't even remember. Then one fine morning, the banker will come knocking at your door, because as a guarantor, you are also liable for that loan, and this will spoil your credit history as well. So be very, very cautious while giving up personal guarantees for anyone, for that matter. Number one. Number two, whatever financial facilities you are availing from banks, maybe it's an overdraft or a credit card or anything, then you should not default on those, because it's more about being kind of uninformed, or I would say that being maybe lazy for such kind of transactions, but it has a long term repercussions. So, having said that, there are people who come with a -1 kind of credit score. That means there is no credit history. It gives the banks, I mean, less comfort, I would say. However, so since banking is a risk return trade off, right?
Yeah.
So, when a banker is there, then a banker will kind of try to compensate that with some other factor, which could be a credit guarantee, CGTMSC
Hmm.
guarantee, or which could be a collateral security, or which could be a greater contribution from the promoters or from the founders for the project. So maybe if it is a 10% contribution that a banker would have taken for a person with no credit history, maybe he
Hmm.
or she will take maybe 20% kind of contribution, or maybe a small FD or something. So the problem is in India or across the globe is that our policies are gender neutral, and we are very proud of it. That okay, we don't discriminate on basis of gender. So with gender neutral policies, you cannot bring those who are at the bottom up to the mark, right? So you have to become a very gender sensitive organization. So rather than gender neutral, you should be gender proactive kind of organizations, wherein you can have policies and practices which can empower these women, rather than you say proudly that we don't discriminate for women. Man, it's not a point to be, not a matter of discrimination, it's a matter of affirmative action, rather, that
Yeah.
you proactively make schemes like those. So, for a woman or for a man, when you talk about access to finance and and credit history, bankers will apply the same kind of yardstick, maybe slightly disadvantaging the woman borrower, I would say, because there's a
Hmm.
perception, and even I've seen women bankers discriminating against women borrowers. So that's a mindset problem, actually. So, if you have a good transaction history, 6 months, good, GST, good, we call it fit rank. So, wherein we have the bank record, we have the GST record. So, SIDBI has kind of schemes wherein just basis the fit record, which is your bank account transaction history, your GST, and your ITR. Basis these three, documents, we can do your invoice financing in terms of if you are acquiring a machine or something, then we can finance it just basis these three documents, no other documents required. So it's very important to build a credit history step by step, even if you do not have one. And the first loan will always be tricky. The first loan will always be difficult to get. And I just hope and I wish that there would be more women bankers, or more bankers per se, who can be, more gender sensitive while applying this lens, because it is proven across the globe that women are better of the borrowers. They are better gender in terms of credit worthiness or bankability.
Great, great. Thank you so much, Anubhaji. And definitely, we need more bankers who do gender intelligent banking, because there is so much opportunity in terms of so many unserved and underserved customers waiting, to avail all of the banking
Big market,
services.
very big market.
Yeah. there's a huge market waiting for this opportunity.
Yes.
And also, very, very useful that you have to be very cautious in terms of guarantees that you give for others, because then you become legally liable, and it could
Liable.
end up also affecting your credit scores and credit worthiness. So,
So, Sonal, one
in
more thing,
terms,
I'm just
yeah,
interrupting you over here.
yeah,
One more thing is
yeah.
your net worth statement. So, how
Okay.
much you
Net worth
own and how
statement.
much net worth, how much is your financial net worth? So, how much you own and how much you owe. So it is important to have ownership of properties, which can be factored in your net worth statement. Even the jewelry that you are having can be factored in as liquid assets. So which kind of supports your ability to run the unit, your financial ability to bring in your contribution. Your liquid net worth is that much that you can bring in your contribution, and also if the unit runs into some kind of rough weather in future, then you have the financial wherewithal to rescue it out of it.
Yeah, very, very critical. I don't think I've ever heard, of this net worth statement, any banker talking about it, but it's so critical. So, like your own
It
personal
is.
balance sheet, assets and
It is.
liabilities,
It is.
so that you can give confidence to the bank that this is where you stand, and you'll be able to take care of things, in case of,
Absolutely.
yeah,
Yes.
circumstances going haywire. So I think there are a lot of women waiting with questions. But my last question before I take a set of questions from our viewers, Anubha ji, is that what are that are very, very critical if you need to become a financially resilient business? Because everything out there in the system is out of your control, but there are many things that are under your control: having your documents in order, building a good credit history, having your net worth statement, taking care of knowing what are the schemes out there. So, what do we do to build a financially resilient business
Resilience.
in our current circumstances?
I think women are kind of, although I'm against this terminology, but then biologically programmed to be more resilient. And I would say their, their reaction to financial shocks and other shocks, that is, I think, more, I would say, robust. We are programmed to be more resilient because it has been maybe ages since we have faced discrimination, we have faced and we've kind of than on a man's. So because of that, dealing with bank by women borrowers also. But we've seen, I mean, COVID time, we know that the kind of it was a once in a millennia kind of an event, and we saw the how important resilience is. And it all COVID prompted us to recalibrate our priorities and our kind of the strength, inner strength that we have. So more resilience in terms of your financial situation or your ability to bounce back after a financial shock, that is important. So one is that women have a tendency to save for the rainy day. That's important because you must have something to fall back upon once you fall in the rough weather. And secondly, the shock could be from many sources. One is that untoward on unforeseen kind of events, or it could be the market turning out differently than you thought. Maybe when you go for scale, then probably that kind of market is not there. So it's very important to take one step at a time and analyze that where the things are going wrong, and kind of build your capacities alongside. It's very important to have a network. And I mean, it's great that WEP is doing this wonderful work of having such a great platform and such a great network of women. Because when there is a network, so it's a kind of a peer to peer kind of
Yeah.
model, wherein women can learn from each other, give strength to each other, and a lot of problem solving happens when people sit together. So when you talk about, I'm just giving one example of business incubators. And I really wish that there could be business incubators not only for startups but also for regular MSME units, particularly for women run units and all, wherein people sit with a lot of problems, a lot of, wherein resources are kind of pooled in, not only financial resources but even operational resources can be pooled in. For example, I'm just giving you one example of Y Combinator, which is world's
Yeah.
most reputed and most incubator, which is done very well. And it's based out of the US, and they invest in startups, but first they incubate them. So I was talking to a Y Combinator incubated startup, and the founder told me that it's not that they give you money; it's they give you, the investment, first check they give you. It's also very important that they give you access to different kind of resources, as well as the problem solving abilities. So if 10 founders are sitting and working on a common problem, then it becomes that much easier. So that kind of networking, if women have, that makes them all the more resilient. Then, of course, it is a financial planning is very important for becoming resilient. And when I say financial planning, it is also about allocating or suballocating your resources to different things. Like if you have a certain, 100 rupees, then you should kind of allocate it proportionately to different kind of activities, and always have a contingency available there. That suppose your marketing budget exceeds from what you had planned to start with, then of course you should have
Yeah.
a contingency for these kind of expenses. And these, I mean, I'm not sure how much it will benefit the women over here, but these days there are companies that are offering fractional services. So when I say fractional services, so
Mm.
if you can't afford a CFO or a, that kind of a, if you are at that scale, then there is
Yeah.
a fractional CFO to help you. There are companies who provide, a fractional service, a fractional HR person for your hiring needs, a fractional CFO for this, a fractional IT person for your digital marketing needs, like that. So this is important to allocate your resources very judiciously. That will make you that much more resilient. And you all are digitally empowered. So I'm sure you know about things like ONDC, or different digital marketing channels that are available. Going digital is very important because it enables you to have a much wider outreach than physical or even omni-channel businesses. And apart from the reach, it is a very, I would say that it adds a lot of value, and it has a lot of cost benefits. So you can save a lot of money if you're going digital, and if you're employing search engine optimization, or employing the digital tools for your marketing. So these are a few things wherein you can become resilient to withstand unforeseen shocks.
Perfect. This is super. I will just quickly repeat. For being financially resilient, save for the rainy day. Assess your risk. Where is your risk coming from, and provision for that risk in advance. The different types of risks that you can imagine. Have a network. Network is very important, as you say, for problem solving. Financial planning is extremely important. If you are a small business which cannot afford to have multiple operations, whether it's HR, marketing, sales. There are companies out there who are providing such services. So find ways of availing services efficiently and in an affordable manner. Going digital, as you say, is extremely important because it not only brings in efficiencies, saves you a lot of money, but gives you a much wider outreach irrespective of which geographical region you are based out of.
Absolutely.
With those mantras, we go back to the questions that our viewers have posed for you, Anubhaji. The first one is from Pragna Das. She's saying, I am new in the entrepreneurial venture. We are an AI and robotics company. Are there regular pitching sessions by SIDBI or other organizations where we can go to pitch for investments?
Pragya, congratulations for having a new company or a new business. SIDBI doesn't do venture funding. SIDBI's arm, called SIDBI Venture Capital Limited, runs a few funds. However, these are so venture capital companies come at a later stage when you are a matured startup. For angel investing, there are platforms, there are privately run, because these are private markets, right? So there are privately run platforms. So who can wherein you can pitch and you can get investment if you are considered investment worthy. So there are platforms like Let's Venture, which is founded by my very dear friend Shanti Mohan. It is the first platform, and great that it has been founded by a woman. And I mentored her when she was, kind of setting it up. That was in 2013. So Let's Venture is there. Then you have Inflection Point Ventures (IPV). You have V Founder Circle (WFC), and several other kind of networks which are there. There could also be some location specific networks, like we have Marwadi Angels, which is sitting in Jodhpur and which gives preference to that side. So there could be local networks wherein you can pitch. However, there is a very process which is very very robust, because it's a very high risk finance. So no network would like to jeopardize its investors money if the company does not have that kind of potential. So it is very important to do a self assessment first. Self assessment in terms of what are your core competencies, which is your USP, what is your differentiator, how you are different than other players in the market, and very importantly, what is the market size that is there for your product. So realistic assessment on all these counts will help you well. So if you are just a product ready startup wherein you just have a product and no revenues, then angels will not be very forthcoming, because angels do not understand all the businesses, but they understand revenue. So if you have revenues on your board, then there's a product market fit which has been achieved. So before that product market fit, angels will not come in, because it is very high risk. Other than, I would say, defense or something like space, these kind of technologies which are wherein the kind of materialization of orders is a very long process. So revenue materialization of revenue is also a very long drawn process. So in these kind of high tech or deep tech companies, there could be pre-revenue startups which can raise good amount. However, for general startups, you should have at least a 6 months kind of revenue track record, and have a big market access which can scale you up to the level wherein the angels can get an exit of maybe 10 times or 5 times amount that they had invested. So pitching session, I told you a few names. You can always Google it. What are the platforms? There is, very importantly, there's a She Capital. She Capital is not an angel platform but a VC firm, of course. My friend Anisha is the founder of that company, which invests only in women-led businesses. And their last exit, I think, Clovia, which is a lingerie brand. So She Capital invested in Clovia, and it was acquired by Reliance. And then She Capital gave a very good exit to its investors. And recently, I think there's a show coming on some OTT platform. Anisha is one of the sharks or the judges there on that platform.
Great. Thanks, Anubhaji, for that. Those very useful leads as well on venture capital funds. The next question is from Kalpana. Kalpana is asking, I am under 20 lakhs in turnover, hence I do not have GST. What else can I furnish as a document?
You have this your transaction history, which is very important. So if you have a good transaction history in terms of timely payments, timely orders, and timely procurements, then that will serve you well. So you try to do everything from your banking channel. So don't do any cash dealings which will not build you a credit history. Always do everything in a formal way from your bank account, all the debits, credits. So it will build a history for you. And don't forget to file your ITR even if you are zero tax bracket.
Okay. That's very useful. Next question is, does SIDBI curate and organize skilling programs and upskilling courses on its own or in collaboration with government partners such as NSDC?
We have both the models. Actually, we are working with a lot of government partners, skill councils, as well as different government departments as well. And we have some partners like private sector partners, like we have Usha Silai School model, wherein we have partnered with Usha, which runs Silai School for skilling of women. And other than that, we have private NGOs, societies, etc., who have good skilling programs. So happy to share that we are doing one at SIDBI Patna. We are doing one program in East Champaran, Motihari, by the most underprivileged community, the Mahadalit community, wherein we are skilling them in making bamboo articrafts, which will be marketed to Scandinavian countries like Norway, Finland, Sweden, etc. So we have
Wow.
both the models with the government and also with private players or societies, NGOs like that. However, very importantly, the private players that we work with should have a good track record of those particular skilling activities.
Okay, okay. So there are a host of developmental activities as well.
Yes.
The next question is, what are three tools that women entrepreneurs should invest in to secure a stable financial position? Also, how soon should they start paying themselves when building a company?
That's a very good question and very
Yeah,
interesting one, because if it is an multiple choice question, that which three, picking which three
yeah.
are the skills, I would say that for making them financially secure, one is that when you are building a business, as I said, the financial resilience question, that you should have those kind of wherewithal to make yourself financially resilient for any kind of shocks or any kind of problems in your journey. One skill is that very importantly you must have, you know you must be well informed. So information, because there is a lot of information asymmetry, and
Hmm.
I'm told that WEP runs a portal of all the government, central government as well as state government
Oh,
schemes. So it's very good that this is there, already there, and I'm sure you must be updating also from time to time. So access to information, that's very important, because information is power, right? Number two is the right kind of skills. I mean, you said three skills, but I would say that skilling yourself from time to time, because these are very dynamic times wherein things are changing at a very fast pace. So whenever you're running a business, you cannot do everything yourself. So very important to delegate. However, it's very important to have a basic overview of what your business is all about, so that no one can fool you. So if you are supposing you have a digital marketing campaign and you don't understand digital marketing yourself even a bit, then I mean, you'll be taken for a ride, right? So must have a knowledge of what your business, even if it's a manufacturing business, you should understand your manufacturing process. At least you should, I mean, you should be able to contribute positively to your manufacturing process. So that is the number two. You keep upgrading your skills from time to time. And thirdly, if you're trying to do everything yourself, then you are in for a failure. So don't try to do everything yourself. You know, have a lean team, but an empowered team whom you can delegate to your work. So operations, marketing, finance, HR, you cannot do everything yourself. So initially, of course, it's fine, but then later on, you must have a team which can take care of a lot of mundane activities, wherein you focus totally on scaling up your business or getting new avenues for marketing, right? You said that when you should start paying salaries to yourself, right? So it's this is a question which is very important in startup world, because the founders, when do they start taking salaries? However, other than startups, if you have a business, because therein investors come in play. Investors are
yeah.
paying, investors are investing in the company, so they would be kind of having a control over how much salary the founders are drawing. And when I was running the angel platform, we should limit it like to maybe
Hmm.
80,000. You should not take beyond that, like that. For a proprietorship firm wherein you have not taken from anything from the investors, it is up to you, because the profit belongs to you, right? So carving out something for flowing back in the business, rather than that, the rest, of course, you can take depending on your financial planning. So it's always important to have a financial plan for paying yourself and for paying your resources as well.
Great. That financial planning is extremely critical. I think just one last question because we are almost close to the end of the time limit. is that does SIDBI have sector-specific schemes like for agriculture, waste management, and other sectors
Yes, we
to
do.
fund
However,
entrepreneurs?
more broadly, I would say more broadly. Why? Because we have a very important vertical, which is our green finance vertical. So
Yeah,
anything to do with green in terms of electric vehicles, in terms of waste management, in terms of renewable energies, anything solar, like that. So anything to do with green or energy efficiency, resource efficiency, water, like that. It is that vertical. So we have very good, very very pro entrepreneur schemes under our this vertical, because we believe that sustainability is something which cannot be compromised, and our mandate is not only to create MSMEs, but we have to create sustainable, resilient MSMEs.
yeah,
So that's a vertical. Then we have a lot of focus on something like space tech or defense tech, because these are the emerging sectors, and government also has a lot of emphasis. Other than that, we are broadly sector agnostic. And agri is basically not SIDBI's area, because we are not into agricultural financing directly. However, we are into a lot of agro finance, agro tech finance, or agro processing finance that we are doing. Like in Bihar, we have financed the company which is number one exporter of noodles to Nepal. So
Mhm.
that's an so in the Simanchal area. So I'm giving examples from Bihar, not only because I'm sitting in Bihar. It's been a year since I came to Patna. Before that, I was heading Delhi, but because it is very inspiring, because
Yeah.
a state which lags on most of the indicators. So if something good comes from there, I also feel happy about it. So we do a lot of agro processing finance. We do in agri side, we do pack houses, cold storages, sustainable cold chain, etc. So we won't do something which is detrimental to environment. We will not do it. Something which is on a red list or in a highly polluting kind of a business. Other than that, we are sector agnostic with special schemes for environment and defense, maybe space, those kind of emerging sectors wherein India can emerge as a import substitution business. We can do there, where when we are importing a lot from and paying a lot of foreign exchange. So if we can if we can kind of substitute those with indigenous units, then we'll be very happy to help those units.
Great, great. Anubhaji, thank you so much. I think all of us together cannot thank you enough for such an informative session. There are a lot of viewers on YouTube watching live, and they're all thanking you. So, on behalf of all of the WEP users and everyone watching, we thank you so much for providing such useful information to all of us. We'll definitely come up with more Ask WEP series on financing. And we again thank you so much for taking out time, giving us all the thumb rules on what can be done to become a financially resilient business, and also educating yourself to navigate the environment in which it's any which way is very difficult to be an entrepreneur, but there are also so many opportunities, including so many government schemes, including that of SIDBI, are available to support entrepreneurs in every sector. And also, before parting, all the government schemes are available on the WEP platform. Information on all incubators and accelerators is available on the platform. Please register on the platform and create your profile so that you can access latest information in many of these areas and follow our Ask WEP series regularly. Thank you so much,
Thank
Anubhaji.
you so much,
It was a
Sonal,
pleasure talking to you.
entire WEP team, and all those who have participated for this very, kind of interactive session. A lot of good questions. Uh, it was a pleasure to be here. It's always my mission to help women entrepreneurs in whatever way I can, and I'll be very happy to address if my requirement, if there's a requirement in future, particularly for startups or any particular kind of theme. If you want to talk to take this, then I'll be most happy to do it. Thanks again. Thank you so much, and all the best to all the women
Thank you.
entrepreneurs.
Thank you, Anubhaji. Thank you so much.
Thanks.